However, guys, trading is all about confluence. You want multiple confirmations within the same area. Yo, what is going on, everybody? Man, I am so excited to be filming this video for you all. I know it's been quite some time since I've released any content here on YouTube, and I know so many of you have been waiting for more Forex or trading education here on YouTube on my channel. But guys, I am back. For those of you guys who follow me on social media, you guys know what I've been up to. And for those of you guys who don't know, my father and I have opened up a juice bar here in Claremont, Florida. It's called OMG Juice. If you're in the area, come check it out. But that has been my #1 priority, which led me to have little to no time to film videos or to even trade myself. But things are slowly starting to fall back into place, and I'm starting to have some more free time to produce some content and to get back into trading. So that being said, guys, let's go ahead and let's dive into this video. I know you guys have been waiting patiently. So today I'm going to be going over Euro USD, a little recap slash prediction of what I think Euro USD is going to do for this upcoming week. Today is Sunday, and the markets are about to open in a few hours. But also keep in mind that NFP is this week. We are rolling over into October, so we will have some USD heavy news at the end of the week. But that being said, guys, let's get to it. All right, guys, so we're here looking at the daily time frame, Euro USD. And first things first, we want to zoom out. We want to really understand where this market is trying to go on a bigger time frame. You know, it doesn't make sense to start on the lower time frames because you're going to get faked out. You're going to question why the market's doing certain things. And the answer is on the bigger time frames. If you don't know what's going on in the bigger time frames, you're not going to understand certain things that happen on the smaller time frames. No matter if you're a scalper or whatever the case may be, if you're not a long-term trader, it doesn't matter. You must start on the higher time frames and then work your way down, and then everything will make more sense. All right, so as we zoom out a little bit, we want to start identifying what the market's doing and where does it want to go. All right, now first things first, I always look for equal highs and equal lows. But not only am I looking for equal highs and equal lows, I want to really understand when the market is breaking an equal high or equal low, what is the following reaction? Is it, consolidating after that? Is it going in one direction and immediately turning around? There's some sort of manipulation? What is going on inside the market? Now, when I go ahead and I look in the past, I can see something pretty clear as day, right? I see this low down over here. We have this low. Okay, then when I go to more of where the market is right now, I see we have another low in about this same area. And if I go ahead and drag this line out, we can obviously see that we have relative equal lows. Now, what does that mean? There's a lot of liquidity and money sitting below these equal lows. Now, the reason why this sticks out to me clear as day is because we had a initial big push up to the upside once it came back to this previous low. But then what happened right after that? The market turned right around and came and it took all that money that was below those equal lows. Okay, so this whole area was a manipulation phase. This was basically just taking everybody's money who was thinking this was reversing back up to the upside. A lot of people were buying in this push up. The big ballers said, nope, not today. We're going to push it down one more time before we ultimately decide to push it back up. And that's exactly what they did. You can see, push it down, got the money, and right away pushed it right back up very quickly. Right, in this push up, we only had one down candle. All right, overall, that whole week was a bullish week. But notice what happened when it came up. Where did it stop at? Well, it stopped at a previous high. All right, look at that. Beautiful, clear as day. What does that tell me? That tells me that there is money above here. Now, let's go ahead and zoom into where the market is right now. Market's currently right here, but I'm about to play it out a little bit so you can kind of understand what we're looking at. Now, going back to this push down, where was that last push that really took the liquidity over here to the left? What was that last and final push? It's going to be this candle right here. As you can see, the candle before that, that doji candle, was struggling pushing the market down. Why? Because people were buying this low again. You know, as they teach retail traders, you know, you buy at support and you sell at resistance. Okay? A lot of people were buying it here again. They thought it was going back up. They were right, they just didn't have the timing right. Right? The manipulation came into play. And the manipulation was this candle right here. This candle dropped before it went up to the upside. Now, this is our FU candle, our institutional candle. So what we want to do and identify, mark up that open as well as the 50% of that candle, and we can go ahead and drag that into the future. Boom, right there. Another key thing that I like to look at is the Fibonacci. So we are going to see where the Fibonacci tool lines up. One of my favorite entries is the 88.6. However, I always zone out the 61.8 through the 88.6, and I'm typically looking for my entry around those zones. So I'm going to draw my Fibonacci from the bottom of the candlestick all the way up to the top. And as you can see, the 88.6 is right in the middle of our institutional candle. Beautiful, exactly what we're looking for. But like I said, I'm typically watching what happens within the market around this 61.8 through 88.6%. However, guys, trading is all about confluence. You want multiple confirmations within the same area. So, you know, right off the bat, looking at confluence, we have our 88.6% right in our institutional candle. So as of right now, I would not be looking to enter anywhere near the 61.8 or 71.00. I'll be looking more around the 79 to 88.6% range. So let's go ahead and play this out a little bit. Understand, trading is about confirmations and riding the wave, not predicting what it's going to do, reacting to what it's doing. Okay? And just because I'm predicting a push to the upside to take this liquidity up here off of this candle down over here, this institutional candle, doesn't mean that it's always going to come down here. It could have went back up to the upside and never came back down to this institutional candle. However, if it does and it plays out how we want it to play out, therefore we can go ahead and react to what it's doing. Okay, but we want to be patient. We want to let the market come to us. So I'm going to go ahead and continue to play this out all the way through. And boom, we are live. The market's closed. It will be opening up here shortly. As you can see, what happened? We had a big push starting from up here, pushed all the way down, came right to that 50% of that institutional candle. That was an area we could have looked to enter. Boom. I mean, this thing gave you multiple times to enter. It gave you this wick right here to enter right there. Entry 1 came back down to that same area, the beginning of that institutional candle. Entry 2, and then gave you multiple times to enter within these days down over here as well at that 50% range. Now, no matter which candle you entered off of, you know, your stop loss and take profit should have always been at the same area. No changes should have been made. Stop loss right below these wicks. And I'm just going to do it right. I'm going to do a little bit lower, right at that 50 pip stop loss. And our take profit is going to be up over here at these equal highs, about let's even this out, 175 pips. So we're risking about 50 pips to make about 175 pips, give or take. So this is what we're currently looking at. Let me delete this, clean it up for you guys. All right. So as you can see, we had this push down. This big bearish candlestick probably would have scared a lot of people. But notice what happened. We had that push down and immediately it skyrocketed back up to the upside. understand, guys, these big candlesticks on the daily time frame don't just happen. They happen because big ballers are playing and trading in these ranges. People that have a lot of money are the only people that can move the market that much. Okay, so let's break this down on a smaller time frame. We're going to go ahead and jump to the hour time frame because I want to show you guys one more thing that had a huge play in last week's market, which was FOMC that happened on Wednesday, right? And FOMC is a major news release that happens once a month, and this was it right here. This huge candlestick, this thing faked out tons of people, all right? And as you can see, what happened? As soon as FOMC came out, the market went all the way up over here, took a lot of money, right, from people that were previously selling all up in here. It took all the money that was above this high right here, or above all these highs, I should say, and came right back down in our zone, this gray box, before ultimately shooting back up to the upside, consolidating to end out the rest of the week. Now, let me delete this Fibonacci real quick. And now what I would be looking at as to when the market opens, I kind of have my eye on this area down in here, and more so, I should say, this final push down in here. You can see this wick went just below these wicks before ultimately taking off to the upside. So, you know, if we were to combine this bearish candle with this bullish candle, and we would mark this up from the open to the close, and we marked up that 50% and drag that into the future, right? We have another institutional area that we may be looking at to enter. Go ahead, draw our fib from this low to this high, right up in there. And as you can see, our 88.6 lines up right to the open of that candle. Now, as this market opens, we are just going to follow it. We're not going to enter. I don't recommend trading on Sundays. Let the market play out, and we will react to what happens come Monday morning. However, my prediction is some sort of consolidation in here. Some sort of consolidation in here for a minute. Maybe a drop down, taking out these lows before ultimately shooting its way back up, taking out all these highs on its way all the way back up to here, taking out those daily equal highs. So this is something I'm going to be looking at. You know, the risk to reward on this trade is absolutely insane, which is what you want to be looking for. If something like this plays out, the risk to reward is insane. We would be entering either at the open or the 50% of this last down candle before the up move. That stop loss would go right below these wicks over here, only risking about 10 to 12 pips, and our take profit one would be right about here. So on this trade, you know, risking about 10 to 12 pips to target about 50, 55 pips, but ultimately we would hold this out and we would take profit along the way at these highs that the market will eventually take out. All right, so, you know, take profit one, take profit two, take profit three, so on and so forth. Long term, we're expecting it to go way up here to that 1.1900 area. Alrighty, guys, hopefully you all got a lot of value on this video. I know I was going pretty quick, but if you have any questions, leave a comment. If you like the video, please leave a like, show some love, show me and tell me you guys want more content, and I guarantee you and promise you that I will be releasing more content for you all. Much love. Talk to you soon. Be easy.